Hi, welcome to our webinar today on From Data to Decisions, How Knowledge Graphs Transform Banking Intelligence in Real Time. I'm your presenter. I'm Victor Lee, Head of Product Marketing here at TigerGraph. If you're listening to this live, if you have any questions, please just enter it in the Zoom Q&A area, and we'll get to them at the end of the presentation. Our agenda today is we'll be looking at some of the challenges that financial institutions face with making decisions from their data. Then we'll see how using connected data in a knowledge graph can turn that data into decisions. We'll look at some use cases, some success stories in the financial industry, and then we'll see how, with new AI, knowledge graphs combined with AI can make even better results. Banks today are complex, large organizations with many operations. They don't just store your money and process transactions, but they have to maintain excellent, very detailed security of that information, of their users' information. And they are businesses, so they have to satisfy customers, they have to employ a workforce, and they want to try to grow their business, succeed financially themselves. And as part of their operations, they, of course, handle transactions, which normally you don't pay any fee for, but they offer loans and they may offer investments, either to their customers or for their own account. So there are many things. These operations typically develop over time and in different departments, so they use different data systems. The data consequently is fragmented and doesn't necessarily talk well to its different parts, don't necessarily talk well with one another. And so their ability to really see the big picture and make the ideal decisions is hampered. So they have plenty of data, but not enough context, not enough connectivity. Let's look at some of the challenges in detail. In fraud detection, they have the account records, they have the transaction records, and the decision they need to make is this particular transaction fraudulent or not? Or is this account a fraudulent account? Those transaction decisions, in fact, have to be made in real time in many cases. The problem is fraud today is a very sophisticated operation where the fraudsters are trying to hide their tracks. And if you look at only the surface material, it usually looks fine. You have to look deeper to see who is this party connected to? What other parties are they connected to? Or is this transaction part of a pattern? So they need to have connected data, and if the data isn't connected, they're missing a lot of fraud. There's also information that's not in those data sources. Financial institutions and governments share information about the latest fraud attack schemes. That information is communicated in natural language and it somehow has to be encoded into the automated fraud checks. So there's a challenge there with getting that information in, getting that knowledge in. Looking at risk and compliance. What do we have? Well, first of all, what types of risk are we talking about? There is investment risk, there is transaction risk, there is loan risk, and there's lots of government regulations, compliance, particularly around money laundering or other certain types of financial fraud. Um, and so the businesses need to follow certain guidelines. The decisions they have to make is, again, as I said, is this transaction or loan or investment too risky? And to do that, you need a very well-rounded, holistic 360 view of everything that's going on. And again, if your data is not connected well, you're not going to be able to make the best decisions. And then compliance guidelines change from time to time. How do you incorporate those in? Again, those guidelines are written in human natural language. They have to be translated into code, and that's an expensive process. And finally, As a business, they want to grow. They want to acquire new customers. They want those customers to engage in more business. And so the typical approach is personalized recommendations. And again, how do you do that? How do you understand who is who? What is their situation? What is their profile? One key information is to understand the whole household. Is that information easily available and computable to see how persons are related to one another in the same household, or how different corporate organizations are connected to one another? Is that information connected to your risk information? Because it doesn't make sense to offer more business to an organization or individual that's actually on the borderline of being risky. So, and lastly, if the business is offering, if the bank or financial institution has special promotional offers, special things like that, that are again, usually written in natural language, how do you translate that in? So there are a lot of challenges here, and disconnected data makes it very hard to execute. Let's take a closer look at fraud detection. Here's an example of where user one has an account and transfers money, sends money to account two held by user two. We have information about the devices they're using, their phone numbers and email addresses. Nothing here looks problematic. But if you're able to look deeper, then you see that user two is using a phone number that is also the same phone number that was recently used for a stolen credit card, made a payment using this device, which has that phone number. So if you're able to look far enough, you see that there actually is concern here. So the ability to have all your data connected and to be able to explore that and analyze that very rapidly is critical to maximize fraud detection. Risk and compliance. One thing that banks need to do for Know Your Customer KYC is to keep track of politically exposed persons and to see if they are doing business with any of them. These are people who hold an important position in a government where they could be, influencing policy decisions, or persons who are closely related to those persons. And so obviously this is another case where the ability to connect the dots is important. Um, you may not be dealing directly with that politician, but you may be dealing with a relative. You may be dealing with somebody who you may be doing business with this company and who has these officers, and who that officer is also on this other company. This politician is a key investor in that company. And so knowing this information is very important for not just compliance, doing their obligation, but to assess risk on their own account. And these could be, again, is there political influence here? Or is there, again, loan or investment risk? Because if too many things are tied together, you lack the diversity. You're not spreading the risk, you're concentrating the risk, and that can be problematic. So if you have knowledge graphs, you can address that problem of disconnected data. A knowledge graph, first of all, a graph is just where you bring in your structured data. You have those account holder information, merchant profiles, transaction logs, and details about the products and services offered. Everything that's in your existing tabular data, it does have relationships, but it's not structured to express them. So you reorganize the data so you now have semantic, meaningful relationships which can be chained together where you can see paths. So this user sets up this account, which is authenticated by this email, and uses this device for authenticating the account. And the payments, again, sent to other accounts, sent to other users. So you can very easily follow the chain and very easily analyze if you're on the right type of platform, if you're on a graph database or graph analytics platform. But more than that, now with generative AI and large language models, LLMs, you can take unstructured text, that is, documents, reports, guidelines, investment reports, um, economic outlook reports, those promotional offers, things written in human language. You can use an LLM, which will identify the entities and relationships and turn this information into part of the graph. You'll see that, things like the different types of accounts become nodes. The businesses mentioned in the economic reports become nodes, and then the various relationships linking things. What's more, you generate embeddings. Embeddings are encoding of the natural language into a numeric vector form, which will allow comparison of different pieces of text so that you can search for phrases and find things that are semantically closely related. So this is the knowledge graph technique together with the new LLM technique to bring in unstructured data is offering amazing new capability to increase the capability for businesses to turn their data into really decision-making engines. Using traditional knowledge graphs, where just using structured data, businesses, financial institutions are already reaping huge gains. Fraud detection when using graph is typically improving fraud detection rates by an average of 20%, which for larger institutions can be $50 million in annual savings. They're also using it for the very important task of entity resolution, Customer 360. This is critical when you're bringing your data in from different sources and things have been the same person may have different IDs. Their name or address may have been indicated slightly differently. There are some explainable mismatches, but it's a difficult job to analyze at scale. And the graph view, the way that it looks at relationships, actually greatly simplifies and empowers the ability to perform entity resolution. And then what you end up with is a comprehensive customer 360 view. And if you extend it with a graph, you're also playing into know your customer KYC because it's a graph, you're not only having a resolved view of individuals, but you're seeing how those individuals are connected to other individuals in other companies, etc. Some of the use cases, the customer success stories. JP Morgan saving over $50 million dollars a year by using real-time graph analytics to transform their fraud detection. Previously, they were using best best efforts, industry best, without graph. But once they added graph, they were able to see much deeper patterns, much deeper relationships, the relative influence of different nodes, the communities within the transaction networks, and that was able to improve their fraud detection by 20%, again, resulting in $50 million dollars in savings. That's for credit card transactions. Nubank, the largest financial institution, the largest neobank in Latin America, operating in several countries, was having a problem or challenge with mule accounts. In order to catch the mule accounts using their legacy system, they were having to make very harsh filters. So it was blocking a lot of transactions. A lot of those were actually innocent transactions. But by using graph, they were able to form much more precise, much more nuanced checks of transactional activity. And again, using TigerGraph and these graph patterns or graph features, they are able to, again, improve their precision by 20 to 30% and importantly, reduce their false positives greatly, saving money for themselves, saving money for their customers. So, greatly increasing customer satisfaction. And here's a third case. Another major financial institution in the United States one of the major credit card companies, um, like any other large company, has an IT network. They have hardware and software, and it needs to be updated periodically. It needs to be recycled periodically. And unfortunately, hardware eventually can fail. And they had a great need to build an interconnected network to see the dependencies among the hardware components and among the software components so that how can they best perform maintenance to have negligible impact on critical operations? And how do they design their network so that when there is an unexpected failure, it again has minimal impact? And how can they, when there is one of those unexpected failures, how can they quickly trace it? Using TigerGraph, they are able to implement this dependency network, which is a real-time digital twin of everything that's happening, and made significant savings in operations. But now we have AI. All of that was just the power of graph and machine learning. And now we have generative AI. We can work with human language and we have agents that can perform operations for us. So, how can this help out? Well, AI could be improving the work of fraud investigators. Not all fraud is just automated yes no decisions. Sometimes you find a suspicious pattern, which is then set for a human investigator to take a deeper look at. So, with Gen AI, we you spot the suspicious activity, you generate a summary for an investigator, you suggest what the investigator might look at next, and you enable them to just ask again, ask in chat, please show me what, look deeper here and show me these things. So again, without having to write a database query, investigators can get these quick answers. And then once they've made a decision, if they need to file a suspicious activity report, the AI can help write the report for them. So this is greatly improving the efficiency of human investigators, one of the most expensive parts of this type of fraud investigation. Secondly, businesses, financial institutions, and other businesses need to make operational decisions. They need to make strategic decisions. They need to see what's going on and decide what to do based on that. So the AI can be monitoring their metrics, send alerts in clear language about what is the concern, and suggest actions. They can also, as compliance guidelines come down the pipeline, automatically translate those human language compliance rules into encodable, executable operations. And third, more on the customer relational and recommendation side. This is getting to more the classic chatbot. So we've all worked with chatbots. So you can incorporate that knowledge, turn that knowledge graph into the answering service. Um, it is your knowledge base, but in that graph structure, so it has a much deeper relational understanding of things. Um, these can be both customer facing and internal employee facing knowledge bots. So these are one of the most great success stories of where AI is helping people do their jobs better. It's not replacing them, but helping them do their jobs better. JP Morgan has put its stake in the ground saying that it wants to be the world's first fully AI-powered mega bank. They've been on this journey for the past few years. Just a few months ago, they released LLM Suite, which is an internal portal for them to use vetted large language models to give every employee AI agents to improve client experience, curated with those AI concierges. And here are some quotes from Derek Waldron, their chief analytics officer. The broad vision is to be a fully AI connected enterprise and to realize AI's potential by stitching the cognitive power of AI models together with the bank's proprietary data and software programs. And so both of these quotes realize the importance of having things connected. Your data needs to be connected, your tools need to be connected. That is the road to success. AI needs that, humans need that, data needs that. The generative AI that we've all experienced with things like ChatGPT and even Google has it now and other tools I'm sure you've used. What is really great, the first thing you notice, you can talk to it. Language fluency. It's really good at analyzing the data that it was trained on to see patterns. And from those patterns, it can create new content. Just like it can write a report following the pattern of similar reports it's seen. That's the generative capability. But where does it have problems? It has middling. Some people would say bad. Some people are, how we're impressed is varies, but it's not always good at reasoning. One thing is it has a very strict way that it quote understands things. It's really about seeing those patterns and doing inductive reasoning and making predictions on what it's seen in the past. Um, it's limited, therefore, by the context. What information did it have when it was trained? It has to be trained explicitly. So, um, particular if your LLM is not was not trained on the latest data, then it's not going to be making the best decisions. And also, this ability to first follow the pattern, but then roll the dice and create something new that fits the pattern is one of the reasons for hallucinations. Hallucinations where it the AI thinks something is true, but it's not. And self-checking. They're designed, the ones that interact with humans are designed to position themselves as being pretty confident and charge on forward. Um, they have a limited ability to check their own work. So they can't always provide an answer. When they do provide an answer, they're not always the best one. And the worst case is they sometimes hallucinate, present things as true when they're not actually true. And this limitation comes from the fundamental technology underneath. I mentioned before embeddings. It's taking uh, so-called unstructured information, human language or images or video, and encoding it as a set of numeric vectors, like taking this sample text and turning it into this numeric embedding. Well, what is the coding scheme? The coding scheme is that codes that are interpreted as vectors and where the vectors point in approximately the same angle, then they will be closely related text or content, video, whatever. Closely related. If it's words, it usually means the words are similar or the words have similar meaning, semantics, in the sense of substitutional. It sees, oh, these words, new and fresh, were often used in the same place, so they're similar words, or small and little, often used in the same place, so similar. So similar, then having similar numeric codes. The problems with that is the individual dimensions don't have any meaning that we can talk about. You have to take it as a whole. You can't break it down. And that hampers its ability that you can't change the focus of your question based on the context of your current situation. The encoding was based on the information that it had available when it did the encoding. If and the again the sense of similarity. If you're trying to if the focus is similarity, that's how the encoding is going to work. If the focus is what words often come after these other words in sequence, that's the focus. You can't you can't ask about anything else. You can only ask about what it was trained for. And generically, what it's doing is some form of similarity. Similarity is great. It's one of the most important concepts in data analytics, but it's not the only important concept. It doesn't express ownership or sort of the so-called parent-child relationship. It doesn't express the idea of collaboration, um, people or things that work together but are not necessarily similar. So it has a limited ability to answer questions. Knowledge graphs address that weakness. Knowledge graphs have the relationships that you define, and they provide that 360 context. You get contextual information, which places the question in a certain grounding, which is going to lead to better recommendations, better predictions. When you combine the knowledge graph with AI, now the AI is more likely to understand the question, to understand the context, and to make good recommendations, and to use that context to explain why it made that recommendation. Knowledge graphs also improve reasoning. I said Gen AI does a good job of taking lots of examples and generalizing. That's called inductive reasoning. What is not naturally designed for is deductive reasoning, where you take some chain of premises to reach a conclusion, such as A causes B, B causes C, therefore A causes C. Pretty simple for a human, very simple for a graph. You can see graph is practically made for that. A causes B, B causes C. When you combine the two, when you have a knowledge graph with AI, you get that well-rounded reasoning that humans have. And lastly, knowledge graphs provide a great way to provide guardrails or checking. Suppose um, you don't want your AI, you have certain restrictions. There's certain approaches that are forbidden. There's certain information that should not be used. You can express those as relational information. Um, you know, the graphs are inherently good at expressing rules and how rules relate to one another, such as in a decision tree. Um, that's another great use case for graphs, decision trees. So, with combining a knowledge graph and AI, the prompts and responses avoid those big mistakes, those big policy errors or factual errors or including content that it shouldn't have. How do you actually do this? You follow a system called graph RAG. RAG is retrieval augmented generation, and with graph, you're leveraging the knowledge graph to provide that enhanced information. You have your question. Human asks a question. That question gets embedded, translated into a numeric vector, so now the computer can work with it. Now you search your knowledge graph for content that is related to things in the question, not just similar. Vectors can do similar, but as we said, there are other types of important relationship, parent-child, collaboration, um, time dependence, which are not the same as similarity, but are important. So you search the graph for related information. That information has embeddings. You send those embeddings back to enrich the original question. So now when you go to your primary question answering AI, you have not just the original context question, but you now have this intelligent content provided by your knowledge graph. That leads to the better answers. That can be, again, background information. It can be guidelines about how the question should be answered. That leads to more relevant answers, more thorough answers, and answers less able to follow the guidelines of the organization and avoiding a lot of hallucinations. What TigerGraph has done in this area is you need a graph. You still need vectors for storing those embeddings and finding similarity. So we've combined this capability using TigerGraph's existing design for a distributed database and massively parallel processing. We applied that to vectors So you now have a highly performant vector database, which is tightly coupled. Each node here can have a vector. The vector DB performance 5 times faster than comparable um, platforms, 23% faster, excuse me, higher recall accuracy. Why is this the case? It's because this similarity index in order to be fast, it makes approximations. And basically, our system is more efficient. It can be more precise in the same amount of time. That's why it's more accurate. And again, that efficiency, TigerGraph has this speed and scalability, and because it does it efficiently, we're able to deploy with fewer resources, 22 times fewer resources to achieve the target level of accuracy. So this hybrid capability, both relationship, knowledge graph, and vector for semantic similarity, this hybrid capability turbo boosts agentic AI. It leads to, again, more context, more refined answers, and performance. This is all leveraging TigerGraph's well-established performance, speed, massively parallel processing to be able to traverse billions of relationships in sub-seconds. The ability, if you're in a whether cloud or traditional server-based deployment, distributed database to scale out horizontally to grow to the trillion edge scale, which we've tested. And to do that efficiently across many, many hops to answer more complex questions. So, more complex questions more quickly at scale. All the analytics are performed in database. And it's not just analytics, it's also operational transactional workloads. Both types of workloads can be executed on the same system. And because of this efficiency, speed and power with the same resources that other vendors use, you actually have a more economical system because more bang for the buck. Our expertise in a lot of these use cases, such as transaction fraud, entity resolution, and product recommendation, has been encapsulated in solution kits. Solution kits are packages that include a graphical user interface, a graph model, so like the nodes and edge types, queries and sample data to lay out a working example of a use case, which businesses can quickly deploy and easily modify to suit their particular needs and get into production in just hours or days instead of weeks or months. So to summarize, talked about how financial institutions, like many other businesses, really need connected data and knowledge. And with that capability, that will turn their data into decisions. That connected knowledge graph is providing relationships and patterns, it's providing contextual information, and it's providing easy machine learning and AI integration. We've gone over use cases for fraud detection, risk and compliance, and personalized recommendations. And we have even more we could talk to you about. And knowledge graphs also boost generative AI. They do that providing more context by providing deductive reasoning and providing guardrails. So again, I'm Victor Lee. Thank you for being with us today. If you're listening live, I stand ready to answer your questions. So thank you for joining us today on this webinar, From Data to Decisions, How Knowledge Graphs Transform Banking Intelligence in Real Time. If you'd like to try out TigerGraph for yourself, you can just scan this QR code or go to tgcloud.io. Thank you very much.